Hi guys, welcome back to my channel. My name is Victor. I'm based in Canada. I share about lifestyle skills, entertainment, and in today's vlog I'll be sharing with you 10 simple steps in becoming a homeowner in Canada. So if you're looking at buying your first home, becoming a first homeowner in Canada, and you're looking at the steps to follow, so I've been able to put this down in text, and I was able to use a TTS program, which it's a text to speech program or software. So I won't be the one doing the talking, so let me know what you think about this in the comment section below. And if you're new to this channel, please kindly let me know in the comment section as well. I really appreciate you for coming. And also, if you're a returning subscriber, thank you for stopping by once again. All right, and looking at the decision of buying your own house or having your own home, it's a very good investment and a good decision to take. First, buying your own house, the value of the house you buy today, few months down the line or few years down the line would never remain the same. It will definitely appreciate. Another factor is that spending about 1,000 or 1,200 towards your mortgage on a monthly basis, you build an equity by doing that over time, compared to spending that same amount on renting an apartment where there won't be equity after a couple of years. I mean, there is no equity for that. Okay, so it's a very good decision, having your own home. All right, and if you're new to New Brunswick or anywhere in Canada and you're looking at how to navigate building connections and also looking at getting a referral to a good realtor, feel free to reach out, and my connections are going to be in the video description below. Okay, thank you once again, and don't forget to like, subscribe, and share with your friends, and I hope you enjoyed this video.
In today's vlog, I'll be sharing with you 10 simple steps in becoming a homeowner. Step number 1, having a good credit score. Building or having a good credit score or credit history is very important. You want to ensure that you pay back any amount spent from your credit card before the due date, not only just the minimum amount stated in your bank app before the due date, but mostly pay back all you have spent so that there is zero amount owing on the credit card at some point before the due date and start to utilize the credit card afresh. A very good credit score will be about 700 or 720 and above, but as at the time you are watching this, you can always Google to know what a good credit score to process a mortgage will be. As an individual looking to buy a house, your credit score will be checked, and if it's two individuals, or couple, that wants to buy a house or process mortgage, their credit scores will be checked as well. Step number 2. Having a permanent position or job. You need to have a permanent full-time job and not a contract job. This applies to an individual or two that are willing to buy a house. Processing a mortgage cannot be done while having a contract job, but during the time you are having a contract job, you can keep saving towards your down payment. Down payment is mostly 5% of the house you wish to buy, but this percentage might be different from one financial institution to another, but mostly it's always 5%. How do you know the cost of house you can afford or buy or that you will be pre-approved for, so that you can save for this 5%? That brings us to step number 3 on mortgage calculator and step 4 on saving. Step number 3. Use of mortgage calculator or tool. Get to know or have a good estimate of what you will be pre-approved for by a bank or financial institution. Every financial institution have their mortgage calculator or tool online. Simply type on Google the name of the financial institution or bank you might like to make inquiry on or process your mortgage with, followed with the word mortgage calculator or tool. You can always shop around using these tools to know which one works best for you. In this calculator, you fill in your annual income and specify any amount you have in loan, if you do have any. This applies as well to an individual or both individuals buying a house. Step number 4. Saving for down payment and other legal fees. Having known the amount you are qualified to get or that you will likely be pre-approved for from step number 3, then you can make an informed decision on saving for the down payment. Down payment is mostly 5% of the house you are buying, as mentioned earlier, but you need to save extra for other things you need to pay for, such as the transfer of ownership or deeds and other legal fees. For instance, if your pre-approval is $240,000, you can plan on saving $1,200 to $1,500 every month, and within 10 to 12 months you will have the 5% with some amount left for other needs. Step 5. Getting pre-approval. Having met all the steps from numbers 1 to 4, it's time to approach the financial institution you are interested in going with to process your mortgage. Your consent will be obtained first before they can check or pull your credit score, and also request you send in your employment details/letter. Granting permission to have your credit score checked by several financial institutions in order to decide your pre-approval or get credit is not always the best, so make sure you first take advantage of the online tools stated in Step 3. This applies to an individual or more who wants to buy a house. Step 6. Working with a realtor for house search. Get a realtor who will help to be on the lookout for the type of house you want and the location you want it, and based on the amount you are pre-approved for by the bank or financial institution. You can always be on the lookout as well and forward any new house listing you see online that meets your demand and pre-approval as well. It won't be ideal looking or shopping for a house of $900,000 with a realtor when what you are qualified for based on your income is $250,000 as an individual or $450,000 as two individuals. If you need a referral to a realtor, you can connect with me by checking this video description. Step 7. Schedule viewing. After finding a house you like, either the ones your realtor sends to you or the ones you are able to find yourself and notifying your realtor, you can always schedule viewing. Your realtor will schedule time to go for viewing with the seller, or mostly the realtor working with the person selling. Confirm the items that will be left or available in the house: dryer, washer, electric cooker/stove, fridge, and so on, when you go for viewing. The list will most likely be on the building or house details that will be given to you on the day of viewing, but you can always verbally ask or confirm as well. Viewing is very important. Step 8. Place an offer. If you like the house based on what you see, the location, proximity to shop, school, the price, and the advice or insight given by your realtor, then you place an offer. A realtor can guide on this. Kindly note that the asking price is not always the amount you will place as offer, as other people who came for viewing will also place their own offer as well, inasmuch as they like the house and it meets their specifications or taste also. Note, you can also buy a house at the pre-construction stage and be given the date of completion of the building. This can be more affordable and you get a brand new house at the end. You can decide on getting a place where you can rent out part of the building which pays your mortgage for you or part of it. Step number 9. Acceptance of offer and legal documents. When several people place offers for a house, it's mostly the person or persons who place the highest offer that will get their offer accepted or based on some other rare factors, but all the steps earlier mentioned are all crucial. Having or getting your pre-approval from a bank ready at hand makes things faster as well. If your offer was accepted, send your acceptance of offer to the bank or financial institution who pre-approved you. Get a lawyer who you want to work with, based on their price and other factors. The bank will request you to have your lawyer's details sent to them, and the lawyer will finalize the aspect of transfer of ownership or deeds and other related legal documents. Get your home insurance done as well based on the closing date stated on the letter. You will sign all documents and agreement on how you want to make payments, the account details you want to have your money taken or withdrawn from, and your payment frequency, either on a bi-weekly or monthly basis. Pay the down payment and legal fees. Note, cashback can be done from this down payment, but that will increase your interest rate. It's not compulsory to do a cashback. If you are interested in it, you can always confirm at the onset with the bank to know if they do cashback and what will be the interest rates on different amount of cashback. Most times cashback is done if you need it in buying things you might need in the house or fix some stuff. 10. Closing date. All supporting documents must have been completed on or before the closing date or possession date. You do a final inspection on the closing date to ensure all household items or appliances are working and in good condition. Anything that needs to be addressed or fixed can be done even before the closing date. Sign your documents with the bank and lawyer and get the key to your home. Congratulations in advance on becoming a homeowner, and a big congratulations if you have become one already. For inquiries and to connect with me, check out this video description, and don't forget to subscribe to this channel, like this video and share with your friends. Thanks. Till I come your way next time. Stay blessed.